check. All right, looks like I actually started it. Hope that everybody can hear me. This is my first live stream. Very excited. Gonna do a couple things today. Wanted to try live stream out, build a little community here on YouTube. I've been doing this for about 2 years now. 2,000 strong subscribers. Thank you to those of you that have subscribed and enjoy this. I'm going to talk about a few charts that I've been posting through the years, some old ones, some new ones. Also wanted to take this time to talk about how I, have a varied background, perhaps than perhaps a lot of YouTube, U.S.-based YouTube streamers, because I'm based in Europe. Grew up in the U.S., but based in Europe now for family reasons, and I just wanted to provide a little info to those that were interested about my my background, why certain things interest me, and what I'll talk about on this channel as time moves on, basically. So forgive me, I'm being a little bit slow in the intro here because I'm viewing the chat and trying to just get a gist of this, because I've never live streamed before. So this is there'll be a few kinks in this live stream, but hopefully you guys can enjoy it. Just checking that my sound is actually okay, coming through just fine. Not wearing headphones, so I can't even hear myself, but I can tell from the monitors, at least it seems to me, that it's okay. Let me actually try this as well. There, you can now hopefully see myself on the live stream. No, it actually looks like that. Oh, that's a little bit delayed. Interesting. So yeah, I can switch back and forth the scenes. A little bit delayed to do that. Interesting. Not sure exactly how that goes. But yeah, I think people can hear me. I think it's all working. So I'm going to keep going here. And, when I finish, this will be recorded for posterity anyway. So happy for that. Happy New Year as well. To some people that have written me in the chat. Okay, so I'm going to put back the charts now. There's going to be some charts, going to be some other things here on the stream. And like I said, just want to provide an update of what I've been doing, how things have changed a little bit with Bitcoin. Going to also talk, again, like I said, my perspective on some other things. Why I'm doing this, why I'm trying to put my thoughts together and do this stuff on YouTube in general. So here we have the old Bitcoin price chart for 16 years now, 16 full years. All right, started in January 2009. It's now January 2005, January 3rd, in fact. So this is 16. Did I say January 2005? January 2025. 16 full years of the Bitcoin network. And we have pricing data, which I have started here May 22nd, 2010. This is Bitcoin Pizza Day. So I've been showing this chart for the last 2 years on YouTube in various ways. Been showing some other charts, but the difference here between Bitcoin and basically most other charts in the financial world is Bitcoin grows according to a power curve or a power regression or a power trend line, and other stuff, the S&P, the price of gold, the price of oil, it most closely resembles exponential growth, okay? And there's a difference there. I'll talk a little bit more about that as we go forward. But what we happen if we look on log scale, what happens to a power curve, all right, is when it's on log scale, it will still look that concave down, sort of the bulges on the top. It will still look that way. Thanks. I have actually recorded an audiobook with by Murray Rothbard, and I'll maybe talk about that as well in this video. Thank you. I will maybe record some more in the future. Let's see. I'm going to try to focus on the channel here and give it more time. But yeah, let me know if I should boost the levels here. Like I said, first time live stream here, so it's going to take, there's going to be some kinks to work out. But so anyway, back to this chart. We got 16 full years of the Bitcoin system under our belt. And we have pricing data from May 22nd, 2010 under our belt. I'm archiving this, though. I'm not going to show it this way in the future. I'm going to do another video on this, by the way. It'll release probably on Monday. This looks nice, and it's, you know, nice, smooth curve. But the issue that I had with this curve, if you want to try to imagine what Bitcoin's adoption could look like in the future, according to this power curve, which is very strong at 96% R squared, was 2021's boom. Did not get too close to the top lines, okay, the 97.5 percentile regression. You can see that during the early days, looks quite well as far as like if the market was too hot or if adoption was too high. 2017 as well hit it perfectly. But 2021 was lower. Now, for a while, I was just thinking that's, you know, that's okay. It is what it is. We'll see what happens next time. And indeed, there's nothing incorrect about this chart, okay, what I've been showing here. It's just been, but what I'm showing here, just so you understand, is look in the tooltip. You see these multiples. So this, the 2.5 percentile, which is the lowest band, okay, this red band down there. You see it says the 2.5 percentile. It says 0.4x, 0.4x. What does that mean? It says if I take the all-time trend and I look at all the times that the price was 0.4x of the trend line itself, that would be a 2.5 percentile event. So only 2.5% of observations would be below that level. Okay, so it's a totally fine way to look at it. You can see it caught the bottom here in 2023, and this is a fine way to do it. But because it didn't look so good on the top side, I wanted to try to look at another way to maybe tighten this curve, but also keep the multiple. So again, on the top side, you see that the multiple there is 6.3x. 6.3x is the 97.5 percentile. So all observations below that top red line, all right, are going to represent 97.5% of observations. So 97.5% of observations of the price divided by the multiple, divided by the trend line, the price at any time divided by the trend line will be below a multiple of 6.3x. 6.3x, okay? So just pick any point here. Whatever the red line tells you, 33,150 here, October 2018. If you divide that number by 6.3, you will get the trend line, 5,230. So it creates a nice smooth trend line, and it's, you know, it's fine. But like I said, 2021 doesn't look as great. So I'm not feeling as good about that. I think it's, you know, again, past performance doesn't equal future results. Nobody knows. This is about adoption. It's about people finding out more about Bitcoin. It could indeed go back to this. I have no idea. Nobody knows the future. Nobody knows what's going to happen 3 weeks, 3 months from now in the Bitcoin price. But statistically, using applied statistics, this is an interesting chart, right? So this is what I've been showing. But at least for the foreseeable future, I'm going to tighten these bands. I'm going to make them a little bit closer together using another method. And that's what I'm going to describe right now. Thank you, Stuart, as well for your comments. Glad to hear the audio is going well here for the first live stream. So I'm going to go to this chart now. This is how I'm going to look at it in the future. I'm going to build it out for you. I have the same regression. This nothing changed here. The regression is the same. It's a power curve. You're using coefficients. You're using all the pricing data in the past to build this nice smooth black line. Okay, and it's very simply the price over time. And time is not measured in dates. I'm just showing this dates for convenience. It's actually measured in days. Days from January 3rd, 2009. So we're on something like the 5,600th day or something. Not actually. I can show you in a second. Don't have that number on the top of my head. We're over 5,500 days from January 3rd, 2009. So as you go up one day or back one day, if you figure out the coefficients, you can build out this power formula and this power curve. So that's the point. Yeah. So Stuart's asking a question about how different models show different projections about this, going back to my point here that I just talked about with my archived model. I'm going to try to explain that a little bit more right now and just show you where I'm looking at it and how this is going to go in the future, at least for me. So here we have the model. And as I said, you need to normalize these things to build these percentiles, right? Let's go back to the archive model. To build these bands below or above, you need to find you need to normalize what you're seeing. And for me, it's always convenient to look at a multiple. So like I said, 6.3x on the upside, 0.4x on the downside. It's like very extreme ranges. That's how I built the multiple. But with this old analysis, again, we're on the archived version. The old analysis, which I've done basically for the past 2 years on YouTube and other places, it's looking into the past with the current trend. Okay, it's looking into the past with the all-time trend. So what happens is, in the past here, this black line, all right, back in 2011, it didn't exist. Okay, back in 2011, the line was steeper. As you can imagine, just look at the green price growing quickly. The Slashdot article was right here in July 2010. A lot of coders got involved. The price went up 10x, basically from a cent to 10 cents, so on and so forth. We got all the way to $30 in July 2011. So the price was growing extremely quickly here. It wasn't growing according to this black line or the red lines, okay? So so even though I've drawn this nice smooth curve, I'm kind of distorting this multiple, all right, that's 6.3x, because if you let's just do raw math here. Let's go to 30. It's actually easier. There it is. All right, if we go to June 2011. If you take the price at the time, which is 30, okay, and divide it by that power regression, the black line, the trend line, which is 2, that's a multiple of 15x, okay? But again, that black line didn't exist at the time in 2011. So you're getting a multiple of 15x, which is a huge multiple, and that's going to go into that calculation of that 97.5 percentile of 6.3x, which is our sort of upper bound in this analysis. So 97.5% of the observations below 6.3x, 15x in the example I just gave you is above that. But again, this trend line just didn't exist back in the day. It's settled out to be this trend line over the last 15, 16 years of Bitcoin's pricing history, but it didn't exist then. So again, I always knew that. I like multiples, so I was using it, but I'm not happy with the way that it didn't catch this top in 2021. So I'm gonna narrow it down. So I go to the new multiple, the new analysis, I should say here. Now let's look at how this trend line would have looked at any time over the life of Bitcoin, and that I'm gonna put on as a dotted black line here. Okay, so of course this looks different. This doesn't look like a smooth black line here. What I'm showing here, I'm gonna even take off the bar. What I'm showing here is it's almost like the tangent of all the trend lines. Okay, I could draw 5,000 trend lines that are smooth, but what I'm showing you is as the price rises, as adoption occurs with Bitcoin, this changes. Okay, it's not an average. It looks kind of like a moving average or something. That's not what it is. It's an evolution of the trend. And so what you see here is, obviously, if you just look at the slope, the slant of how this this moves from a penny to 10 cents to $30 for Bitcoin. You can see that this dotted black line moves very quickly compared to later, where it's just not moving as quick. Okay, so thanks guys for the comments. Happy New Year. I'm glad to be doing this first live show here with you. Really appreciate you guys joining. Okay, so you can see that at the time in 2011, 2013, this what you're seeing here is basically the tangent of like 5,000 different trend lines, just moving very fast here, very, very fast. Okay, so if I put the full trend line with all the data, we're moving faster than all time. But of course, nobody knew what all time would be. Again, I'm defining all time as up till today. Back in 2011, no one knew, just figuring it out. So the point is, when we want to normalize the data, and when I say normalize, I want to find that multiple of where the price could be at this time. Let's just zoom in, make it easier on ourselves. Let's go back to that $30 example now. I think it's June 11th. Why can't I catch it? There we go. All right, so we're on June 11th, 2011, the same $30 example I just used. The all-time with 100 denoted there, the power trend line, it's still $2 at this time. But really what was happening as people were trying to figure out Bitcoin and as it was evolving was the evolving trend line is actually better to use, and it's $5 there. And so that creates a discrepancy in the multiple analysis. So as I said, the old way that I was using was assuming 15x here for just 1 day's worth of data, one multiple, 15x. Really, I should have been using 6x. At least that's the method. Again, either method is correct, but it's a matter of perspective, which lens you're using, how you're going to do this. So that's the point. Where here I was using higher multiples because, again, look at that. Look at how high that price is over the black line. Now, what I'm about to draw for you is using a lower multiple because I'm going over the dotted line. And as we can see here, this dotted line is very interesting. Indeed, 2011, 2013, it's rising faster than the all-time trend. But what's happening is, as we add more and more data, people adopt Bitcoin more and more, they figure out what's happening. This dotted line will turn into the all-time line. And if I just wanted to prove that to you, I can, no matter what, it still rises up again a little bit here, although the delta is less than 2011, rises up again in 2011, falls back down as the price falls lower. And as we slowly get to today, today it should work. Yep. January 3rd, 2025, you can see that they match. So the evolving trend line in this example, and trend line might not be the best word, but I don't know, it's the evolving, it's a one-time trend on every day that just involves. I'm using the word evolving trend line. As it gets to today, it will match the price. So 88,851 is the all-time trend line. But really, if we want to sort of standardize the past, it's better to look at the price divided by the evolving instead of the all-time. And I was using the all-time before. Okay, so having said that, let's take away the all-time. And it's going to look more lumpy now. And I haven't necessarily figured out a way to do this better, but I just want to show it this way. Now I'm going to show these percentiles, but not in a smooth way as I did in the old way. As I'm going to show now on my website and just moving forward, I'm going to show them in kind of a lumpy way as the trend line moves. So here we're going to show the 1 sigma, which is basically anything but between these blue lines is going to happen 2/3 of the time. And then 2 sigma, which is 95% of the time. So here now we have, forget what's happening in the future, we'll get there. But in the past, we have this sort of evolving, it looks like an average. It's not an average. This is just as the trend moves, where is the price over or under where the tangent of the trend line is set, each point, each day, of where a new trend line is set. And that's what this looks like. So for those that really know the power curve, the exponent is 6 all time. Here it was like 10, 12, 9. It was higher. So the slope was higher. It would be moving faster, and it settled into 6. And also from here, what you can see is, again, back to how the trend line settles into something that's repetitive, that is stronger, that is showing us that there is some interesting logic to this analysis, is from about 2016, the end of 2016. Look at how this thing, it's not perfectly smooth, but it looks darn near at a same sort of trajectory as if I would take the all-time trend and project out. And this is indeed the all-time trend. It's nothing fancy here. The future is the all-time, but the past, rather than going like I used to before, of making a smooth curve in the past based on the all-time, like I've tried to explain here on this live video, I'm using the actual evolving data. And so the past is more, I'm making it lumpy just because we have the data. Let's just show what was actually happening. And now the point of this is we can get tighter multiples because I'm using the actual data as it develops, as it evolves. Look now on the tooltip of what these multiples actually, really how they evolved. They're tighter, and they're actually 45% tighter. So let's just use the example. Let's use the top line example again. Okay, here's the 97.5 percentile, which is, you'll find this on my website and stuff. What do we see the multiple is now? 3.6x. What was it in my old version? The smooth all-time version, 6.3x. Okay, so that's a big difference. And again, either way is actually correct. It just depends on your lens, depends on how you do this. This is applied statistics. I'm not a statistician, but I just like running numbers, and this is just, you're just going to have to follow me if you like this or if you find it interesting. I can try to explain it more, but it's just I've gone through a different lens of a different trend each day to really understand where the price was at any given time, and this gives us a tighter multiple. So now instead of 6.3x in the old model on the top end, the 97.5 percentile shows 3.6. And this is better now, okay? So this is just actually what happened in the past, and then actually what happened in the past in 2017. And notice 2021. It still is lower. It still is lower in 2021, but it's closer. And I think it's more interesting, okay? Because this 3.6x that you see in the tooltip, the 3.6x, again, that's still the multiple over the trend line at any given time. So let's just take 2021 here, 60 grand per Bitcoin. The trend was 20 grand. A 3.6x, or 97% of the observations throughout the entire history of Bitcoin up until this point would have put the price at 78,000. Price didn't get there. It was still too high. But this is an interesting, this is, I think, a little bit more interesting way to look at. And then when we go to the future, again, prediction or projection is a purely statistical term here. Nobody knows the future. But if we go to the future, then we can still run this multiple over the all-time trend, which never changed. It's the same trend. Whoops. It's the same trend in the old one. Okay. But our multiple is now tighter. Because I've followed this sort of evolving data in the past, I've gotten us a tighter multiple in the future. And I think it's going to be more interesting. So let's assume that this year is going to be the big year, right? Every 4 years we have a boom. Happened in 2021, happened in 2017, happened in 2013. Let's assume we have another boom. No one knows if it's going to happen for sure. Let's go to the end of 2025. Now, the 97.5 percentile is roughly 450,000 per Bitcoin. Okay. But that is 45% lower than what I was showing with this analysis in the past. So this just shows you statistics can tell you anything. Let's go back here. This is the old model. Look at that. 97.5 percentile was 800 grand, 6.3x over the trend. Trend didn't change. I didn't change the trend line at all. I'm just changing the analysis of how we look around the trend. And so with the new model, you're basically 45% tighter, lower. I think it's better. I think it's nothing's perfect. Past performance doesn't equal future returns, all the rest, never financial advice, all the disclaimers. But if we're talking adoption, if we're talking Bitcoin here, moving forward into the future, I think this is a good, interesting way to look at it. So yeah, so it's tighter, it's lower, and that's, in my opinion, is a better way. So that's this. I'm going to show this more on my website. It looks kind of weird in the past, but what you're going to see in the past is more accurate data. It's like really what the multiple is. And then taking the universe of multiples. When I say multiple, I mean it's a normalization. It's is the price or above, below the trend, okay? So once you have that sort of normalized data, then we can assume, and we can go out in the future, is it going to be 3.6x or 0.2x as a sort of potential target for where Bitcoin's adoption and price could go. All right, so that is that chart. Now I want to just, for even a little bit more fun, and to show you that you can still get $1 million Bitcoin in 2025. Although, again, I can't guarantee any of that. I'm going to show you this very busy chart. It's the same stuff, but I've now taken the percentiles instead of just these kind of rough, almost like standard deviation trends. Again, these are not standard deviations. These are percentiles. Percentiles uses exact data. A standard deviation assumes a bell curve. It assumes equidistant from the top and the bottom of the trend. Obviously, I'm not doing that. Here, I'm going to show, again, all the percentiles in a 10% basically border. So let's just look through this. And let's just go extreme. There's so much data here, and it's so hard to see. We'll just go through it in a different way. So first of all, let's leave the trend, and let's look at the absolute borders, okay? If you take the 100th percentile and the 0th percentile, I'm not sure how to say that exactly, the 0th percentile, okay, quantile, it means literally this is going to pick the last point that's possible. And when I say the last point, it means a multiple over or under trend, okay, that same evolving trend as before. Okay, so as we can see here, in 2011, the last point on the upside was somewhere around this value, which was 7.8x. Okay, it's 30. And I'm actually not showing you the evolving trend here, so let me take this out. Again, it can be confusing, but over that evolving trend that I mentioned, 7.8x was this $35 hit here in June 2011. Okay, and it actually got something close to that in 2013. Again, 7.8x. 2017 was lower. It was not 7.8x. I'm looking at the top line here. And then 2021 didn't hit it at all. So again, we have to adjust for these things, think about them in different ways. It might be that we'll never hit a 7.8x over trend multiple again. Okay, we've just never, we haven't hit it since 2013. 2017 didn't even kiss it, so it might be that we'll never hit that again. Now, having said that, these are the most extremes. These are the most extremes in the data set. Let's tighten it. Okay, so let's go 10% in on the downside and 90% on the upside. So now notice, with 10% and 90%, we're already inside what I showed here. This was the 97.5 percentile. So it's the same type of a chart. So the 10th percentile and the 90th percentile. So this basically says, again, anytime the price is below the blue line, as you can see here in 2011, this is a pretty rare event. There's only 10% of observations below it based on the trend at the time. And anytime it's above the red line, 90% of the observations are below that as well. So again, it's an extremely rare event to the upside. Not equidistant, but equal percentiles on the bottom and the top, the 10th and the 90th. And what we can see here is the multiple comes down drastically. Remember, where I was just showing you at the 100th on the top side, it was 7.8, but the 90th is already back to 2. So here, again, very interesting. You know, this shows you the, I'm going to need to do another chart here to show you the actual, what's the term? The actual, like how many times it happens where the probabilities of it being in the 90th percentile or the 10th, whatever. The data is very much skewed to the right, I think is the term. When you say skewed to the right, it means the data hangs out on the left. I might have explained that backward, but I think that's actually the way. The fat tail is to the right. A lot of the data is to the left. It means a lot of the data hangs out on the lower side in any event. So I should probably get a chart together that shows that as well. would be helpful. But anyway, this is the 10th and the 90th. So now we see that at the, again, just to show you exactly what I'm talking about, this dotted line on the upside is a 2x over that evolving trend line that I just mentioned. It catches all the tops, all right, and it catches even the 2021, actually both double tops, but you can see the really everything that really heated up happened in March, not in November. Okay, it was an interesting double top in 2021. I actually personally didn't think it was the top because it was a double top, and usually double tops don't happen. So it was an interesting double top in 2021. Looking at the chat here. I do think money printing has skewed the value, Stuart. But the interesting thing here is that money printing occurs on an exponential trend, and this is a power trend. So I do think it matters, but it actually doesn't matter as much. And that's an important point. Like if you look at the stock to flow model, if you look at these other things, those are based on exponential type trends. Gold coming out of the ground, or even dollars that come out of the Federal Reserve. Those are exponential type trends. Bitcoin is a power trend, and it literally is more powerful. So the power trend takes over much more than the money print. That's what's interesting about this chart as well, is the fact that it follows it, it's on a power trend, and it takes over exponential growth in a very almost systematic fashion, not like money printing, which can be sporadic, up, down, and also on a trend that's less strong than this. And I'll keep talking about that, by the way. So back to the rainbow chart kind of here. Let's go down to the 80th percentile and 70th, and then let's put on the 20th and the 30th and the 10th. Now you can see here, again, just in the past, where price was hanging out most of the time was in between these different percentile rainbow bands here. And then where does that put us today? Pretty normal. Okay, let me get a little bit hot as we're running into the 70th percentile here. You can see that when we hit the 70th percentile last time in 2021, we dipped right at it for a little bit, but then we started to explode to the upside. So, again, I can't tell you for sure if that's going to happen. Let's go back to 2017 and look at it. Dipped above, below, got to the 70th, 80th percentile, and then again exploded to the upside. It seems poised to do it again, very soon. 2025 is the year on the 4-year cycle as well, year and a half after the halving that this typically happens. It seems that it's poised to explode up, but I can't tell you for sure. Next thing I just want to show you here on this chart, let's put the regression trend line back. Okay. It actually, now this is the all-time, okay? So I'm carrying it forward and carrying it backward in a smooth fashion, okay? Again, the reason mine's lumpy is I'm making it tighter. I'm evolving it more for the trend line at the time, the power trend line at the time, just to say it for the 1,000th time. We can see that it goes up and down, but as we get closer and closer till today, these rainbow lines, which are jagged, turn into, something that looks like a pretty interesting mathematical channel that's, I don't know how to say it statistically, reliable, systematic. I'm from the Midwest, so I want to put all these caveats. Past performance does not equal future results. And then I'll put the 60th on as well, which is a yellow you can barely see in the tooltip. The trend line itself is between the 60th and the 70th percentile. So that's actually an interesting point. The trend line is just, when I say the trend line, just think of it's mathematical. I'm not drawing it with TradingView or anything. It's just mathematical. It's what the data tells us. So the mathematical number is actually between the 60th and the 70th percentile. Let's just call it 65. I don't know if it is, but let's just call it the 65th percentile. That means that when you actually look at this trend line over time, 65% of the data points are below trend. Okay, so that's an interesting figure right there. All right, this 65 versus 35 roughly is where the price is. And now, as we can see what the price is doing, it's from December, from this pump when we got over to 100 grand in November and into December, we are above trend. So we are in by definition, and as you can see in the percentiles, we're getting close to the 70th percentile. We're right on it, frankly. You see that 70th percentile in the tooltip. I'm going to leave the tooltip. You see it right there. It's 99,000 as of January 3rd, 99,000. Price, 96,000. So we are, by definition, moving into more rare territory. And, be prepared for that. So it's going to be a wild ride. But the point should be, again, that this is all math. I'm not trying to do fancy weighted averages or moving averages. I'm really just trying to stick to the math here. And because this is such a strong trend line at 96% R squared, it's really something. One other point to say here about the power trend, about what it actually means. The slope that Bitcoin's slope has found is 6. When I say 6, I mean that's the exponent in the formula. Okay, the exponent is ax raised to the b. A is the intercept. B is the slope. The slope is more important to understand. The slope is 6. That's the all-time slope. Here it was higher, maybe like 10, but now it's 6. And another way to think of that is, you could back into this number very quickly, but I'll just give you the result, is that for every 35% increase in time, the price will move up 6x. Okay? So for every 35% increase in days in the Bitcoin network, the price will move up 6 times. Okay, so if I were to, let me just show you the exact days right now. Feel free to ask any questions in the chat, but I'm going to find the exact days just to run that math by for you and to show you. I'm going to find the exact days. Yeah, so according to my numbers, we're at the 5,844th day. 5,844 days in the life of Bitcoin, okay, thus far. If we multiply that figure, all right, and this, don't worry about how I calculate it, just, know that I calculated it. Why can't I get my calculator? Weird, maybe with the streaming software, which I am new to. Let's take this figure, which is days, 5,844. Let me put something on the tooltip. Okay, so we're right here on January 3rd. All right, this is 5,844 days in the life of Bitcoin. Based on the math, I'm going to tell you that for every increase of 35% in days, so I'm going to multiply by 1.35. All right, that's going to take us out to the 7,889th day. The price of Bitcoin on the model will go up 6x. Okay, so I'm just going to show you because I don't actually know without looking at the chart. The 7,889th day is somewhere around, it is August 10th, 2030. Okay, so look at the trend. Yeah, this is a trend line analysis, not actual price. The trend is 88,000. 88,000. Let's move the trend now out to August 10th, 2030. Okay, moving it out. Sorry, that's. I hope that the live stream is working okay. This is a very detailed chart, so I'm not sure if the tooltip is showing perfectly. Moving it very slowly here for you. Moving out to, so you can see all the figures in the tooltip. Moving it to August 10th, 2030. August 10th, 2030. Something like this. Doesn't really matter. And what do we see there? August 10th, 2030. I have to zoom in almost to catch it. Sorry. All right. August 14th, 2030. Doesn't really matter. The regression tells us 505,000. 505,000. So if I take 505,000 divided by 6, what will that take us back to? About the trend line today. Right? Something like 84,000. I'm rounding with numbers, so it's not exactly, but that's sort of a key point of what you'll find here. Deriving that number it's a little bit more difficult to prove that math out to you, but basically for every 35% increase in time of the Bitcoin network, the price will go up 6x. And actually, I can tell you to double as well. To double, it's about 13%. Okay, so let's just do that again, just to make sure everybody understands the math. Today, in the life of Bitcoin, we are at the 5,844th day. Okay, I'm going to take it up by about 12.8%, something like that. Okay, so that means the price, according to this trend line, will double on day 6,592. Okay, it works at any point, but let's just use today as an example. So 6,582 is it is January 2027. Okay, so when we get to January 2027, according to this model of Bitcoin, we should be doubling that 88,000. Let's see if it happens. All right, let's move it out. We're going out still in 2025. I'm going to just take it slowly so you can see the tooltip for yourself. Sort of think about these numbers for yourself. There's the end of 2025, right? 125 on the price. 2x the price will give you a 90th percentile move, 254,000. Again, just to repeat it, this is how these things work. We're going out to January 2027. January 2027. And what do we have? We have a doubling of that $88,000 power regression. 88,000 roughly doubled. Should I do it exactly? 88 times 2, it should be 170. Yeah, 176. 176. So that is the math of the power curve, the power regression. It's not exponential. I should have had an exponential regression up here to show you locked and loaded ready on this live stream, but I don't have it ready. So we're just going to look at power regressions today. Not sure how often I'll do these live streams, if I'm going to do them weekly or every other day or something, but let me know if you guys like this stuff. Just trying to get a handle on it. People seem to be saying that they hear me okay, which is all good. All right, so let's go on to the next chart. This one I have shown a couple times. Did it on Marty's podcast. Natalie Brunell actually asked for this. I thought it was a clever way to look at it. Very simple. This is United States stuff, all right? United States type indicators. She wanted to see, I should take it off. I took away all the suspense, but she wanted to see various metrics as sort of an index. She didn't actually describe it that way, but I think that's what she wanted to see, and I thought it was interesting, so I just did it anyway. So I picked 1969. This is where I usually start the monetary base stuff. Everything is 1. Okay, it doesn't matter the value at the time. Anybody can make their index. You just set the value of whatever they tell you the data is to 1, and then as that grows over time, you just see where that data goes in relation to what it was in December 1969. All right, so median family income in the last 55 years in the U.S. is 11x higher. Okay, that's median family income. So if you have all the incomes, line them up, median. Now, this is an interesting one. Median sales price, all right, houses sold, grew more. So houses in the United States held their value better than income. Went about 17x in the last 15 years. Income I only have till the end of 2023. That's why it stops. But we have this out to September 2024, 16.9x for median home price. But this median home price is actually, it is overstated here. People pointed this out to me, and it's true, because if you think about what a house offered in the 60s and the 70s, there was perhaps not even a garage. They were smaller. It's possible they were better built, but that's another idea. The point is the square footage is less here. So actually, if you wanted to make comparable to today, these houses are much bigger today. You should raise the price here because because houses were smaller. So if you wanted to adjust for today, you raise the price here. That's how you would do it. But again, I'm not doing that. But just to point out, this is probably even less. The point is, this is probably shallower than it is, this long-term house growth curve. So that's interesting. So there's median family income, median home price. Now we have the S&P. This is where things start to get a little bit. Thank you guys. You guys make me laugh on the. I don't know how to give emojis, but it's. I'm trying now. I'm so amateur on the live stream. Appreciate it. So now things get a little crazy here with the S&P. Let's put the S&P. All right, so this shows you for sure in America and probably everywhere else in the world as well. No, not everywhere else, but in America, value goes into capital markets. It goes into stocks. It goes into bonds. Even though there's not bonds here, it definitely goes in there more. It does not stay in your pocket. It does not stay on the income statement. It goes to the balance sheet. That's where inflation goes. Of course, there's real value here. There's the internet. There's connectivity. There's all sorts of stuff. AI here later, whatever. Amazon delivery systems. There's a lot of good stuff. But this is pretty wild to see that if you wanted to store wealth, it's definitely volatile. All right, you got the .com here. You got the GFC here, and it went way down back to 8x, which was a level that you got not even in 2002. 8x, you'd have to go back to 1996 from 2009. So that's, 13-year difference there. And we had that as well anyway after COVID, but even faster, frankly, because COVID was 38x, and then before that, it was 39. So it only took about 2 years for a COVID pop and then dump to occur. But anyway, the point is, this is pretty wild to see the comparison of the S&P to median home price and median family income. And this, by the way, is not including dividends reinvested. So if you took all your dividends that you were paid out from S&P 500 companies and then reinvested them, you'd be even higher than this. You'd be about 2 percentage points per year higher. I'm not sure the gross number, but you'd be higher. So stocks, 65x of 1969. That is a wild number compared to houses, only 17x. Like I said, that's really smaller. It really should be smaller. And then median income, only 10x from the last 50 years. And then, of course, the big one, this is what I track all the time worldwide, the monetary base. This is the printing press. We have two sort of epochs. We have pre-GFC and post-GFC. But even pre-GFC, you can see it was moving faster. The monetary base, this is the actual printing press. This is the actual money that the Federal Reserve prints. Okay, it's the actual paper notes, and it's the actual bank accounts of banks, basically. Think of it that way. It's the bank accounts of banks. It's the main source of monetary liquidity in the United States. It actually doesn't keep up with the S&P 500 at the end of this series, but it's close. It's very close. The S&P 500 went up 14x. The monetary base went up 13.6x. So you can be the judge there of how those things grow. And then, of course, just the craziness these are just, you're visualizing bailouts here. QE1 to QE1, QE2, QE3, all the way out to 2014. This is a visualization of bailouts of bad mortgage-backed securities, money market funds that just made horrible bets, hedge funds that made horrible bets. Of course, Main Street was not bailed out. It was Wall Street that was bailed out. That's what you visualize here. Just turned on zombification of the financial system. Then they tried to make it better here, and there was a problem. Let's see if I can catch it. Even before COVID, I know COVID was here, but right here, it's really not visible in here. You'd have to look at the repo market, but this 8.9 goes to 9. That was a big problem in September of 2019, and you'd have to look at the repo markets to see this, but banks did not want to lend out this money. It was too precious for them. Even though there was like incredible amount of liquidity on the surface, it was still too precious for them at this level. I know I'm talking raw dollars when you're seeing a multiple, so it's kind of hard to understand. But the point is, all was not well before COVID, and then of course COVID, and then we just get just a silly season. In the height of COVID, we had 100 times more money in the system in the United States than we had in 1969. Well more than the stock market, which was only 50 times more value. Well more than median home prices, which was only 16 times more value, 17, and well more than median family income, which was only 10 times. So this is a good indication of what's actually been happening. Stocks climb again. Like I said, in recent months, I can't update. I don't have all the data here. But this is a decent chart, I think. And now here for the kicker, let's put in CPI and see where CPI fits. And if CPI, Consumer Price Index, is a good indication of the purchasing power of your dollar. Here it comes. It's a tomato line. It's red. Look at that. It's as Marty said on his show, it's criminal. It really is embarrassing to use CPI. I never use CPI. I never want to use it. I think it's helpful in some cases to show how absurd it is, like now, but I'm never, catch my words, but I've never, in all of my economic analysis, and I don't think I ever will, adjust anything by CPI, because what you're adjusting it by is a nonsensical thing. You just have to look at how fast things grow. That's the point. You have to look at how fast the base money grows, how fast stocks grow, how fast real estate grows, and then look at CPI. I mean, it's just a joke to say what they're saying here is in September 2020, October 2024, it would only cost $8.4 to buy a basket of goods than it would cost $1 in 1969. And everybody, everyone in the world knows that that's just not, that's a fiction. I mean, it doesn't cost the same amount of stock shares. I'm using the term stock share loosely there. It doesn't cost the same amount of, building materials. It's more. Your income, it would take more, even though not much more, which is sad. And then as far as money, actual money produced, it's 100 times more, 80, 90, 100 times more actual Federal Reserve notes than what existed in 1969. So it's just a complete joke to use CPI to measure anything. And I'll never use it. You can mark my words there. Maybe I'll measure it sometimes like this to just show how absurd it is, but I'll never use it. And I recommend you don't use it either. It's just never pay attention. Whenever anyone in the news says CPI, just turn the channel. All right. So I think that's a good one. We'll keep tracking that as well. Want to remind you that you can always find the base money work here on my website. This is porkopolis.io/top money. You go to money supply and you hit top monetary assets, money supply, top monetary assets, and you'll get this chart. Okay, so this will show you that, for example, here, the top chart is the top 10 currencies in the world. And when I say currency, it means how you measure a currency. Okay, not by the FX rate, but how do you measure actually how much currency there is? You measure the monetary base of each central bank according to that. So the U.S., which I just talked about, was $5.6 trillion in native value and in dollar value. This is obviously the dollar is the benchmark. But I'm measuring the Chinese yuan, the euro, Japanese yen, sterling, Swiss franc, Indian rupee, Russian ruble, Hong Kong dollar, and the Brazilian real. The Australian dollar is very close. You might notice that this chart updates, by the way, every day. So depending on exchange rates, Australia might come in at number 13 here. I update this every quarter. It takes a long time. There's no APIs for this, but you can see here this is as of 2023. This is as of Q3 2024, update 26. I've been doing this for 26 quarters. I'll keep doing it. I think it's a very good way to look at this stuff. And then Bitcoin, of course, is comparable to all of this. It's comparable to central bank money. It's comparable to all the gold in the world. So that's this. I see a message popped up from Stuart. Have you considered like an M0 or M2 adjusted USD to factor out money printing distortions to use. So yeah, I think as far as looking at those things, I'll direct you back to this. I'm going to do more analysis like this, like Bitcoin priced in gold. But that's just looking at the price. As far as the supply itself, I think this is going to be your best bet for now. Is just looking at this table, not adjusting, not discounting, but just showing you raw figures. Market cap of Bitcoin, we're at about at $2 trillion. There's only 4 central banks bigger than Bitcoin at the moment, and gold. We're bigger than silver. We have been since 2021, by the way. Well, I shouldn't say all the time, but that was the first time Bitcoin passed it. Remember, Bitcoin got to like $1 trillion in 2021, so it passed silver. This is the best way I'm going to do it for now. And M0, by the way, just to remind people, M0 is included in here. This is the monetary base, so it includes M0. M0 is all that cash and coin that's printed by the central bank. That's actually outside of bank vaults, so it's like 96% of cash and coin. That is the definition of M0. Monetary base includes M0. It also includes all cash that is in bank vaults, and it includes bank reserves. Bank reserves are basically the bank account of every bank in the system. So that is the base of the system. That's what you see in this table. I'm proud of this because you're not going to see a table like this anywhere on the web, and I think it will give you guys, I think it will give you a good understanding of where Bitcoin sits in the whole system. All right, here you can just see the variations here. I'm not going to try to. I shouldn't go through all this and bore people that do know this, what this looks like, but you can see all of it here. And if you want to compare it to stocks, we can compare it to stocks. We have Bitcoin here. It's the 6th largest entity in the world that if we compared it to stocks, there's only 5 stocks larger. All right, we just passed Saudi Aramco, all right, last month for the first time ever. All right, so the biggest oil and gas entity in the world we've passed. That leaves only the FANGs. Actually, not even the FANGs. Facebook we passed. So we have Amazon, Google, Microsoft, NVIDIA, and Apple. These are the top 5 stocks in the world, and Bitcoin is a bucket of value almost as big as Amazon. It's unbelievable. It's really unbelievable. So there you can see stocks, and then all the base money in the world in chart form is here as well. So you can see that. Also, if you want to see what I talked about earlier, this is updated to what I just talked about at the top of this video. I have these tighter deltas now. I'm actually showing the smooth on the way back. It's a little bit different than what I showed you, but there's only so many ways I can present data, and sometimes I don't want to confuse things. So these are now tighter deltas here based on this newer approach, which I showed you in this video. So you'll see that on the website updated. And here's the 12.7%. You can see that. You can look at I'm showing you here a time to double of the trend line. And then if we look at the time to double, how many days does that take to double? And notice this is a power regression. So it's, again, if it's exponential, we could find a specific period. We could find, for example, the monetary base globally increases at about 12.7% per year compounded. That's a doubling less than every 6 years. With exponential growth, the time stays the same. That's another difference here. So with exponential growth, we can make a statement like the global monetary base, global money printing, global monetary inflation increases. It doubles about 5.8 years or 5.9 years. So it doubles basically every 6 years, even less. Okay, we can make that statement. With Bitcoin, we cannot. Bitcoin doesn't follow an exponential trend. This is how you can see what happens with Bitcoin is we can look at the doubling time, but the doubling time will actually increase as the Bitcoin system gets older. So that's how it's looking. And it's interesting, the number's actually about the same. It's a different number, but it is about this 12.7%. So if you look at any point, so here I showed this in the video earlier, but if you we're at day 4,000. Let's just go around today. We're around day 5,500 from March. Okay, from March of last year. Yeah, it actually doubles so quickly I can't find you something close to today. But anyway, from March 2024, March of the past year, we're at day 5,500. Increase that by 12.7%. That's another 706 days. That will take you to day 6,244. The price will double. The model doubles. Again, no one knows for sure what will happen to the price, but the model doubles. That's how the power curve works. So we do have it's a proportional increase. That's the key thing to understand about a power regression is it stays proportionate. And that's not the case with exponential growth. Exponential growth is constant, but it is not proportional. This is proportional. And by the way, this is how networks grow. If you looked at the growth of the internet, it would also be proportionate, which is another interesting fact. I'll try to find some more curves like that to show in the future. And then here's another way of looking at what I just showed. Remember how I said that the trend line sort of looks good from 2016? It's settled down from 2016. You can see that here. All right, we're on much faster trends back in 2010, 2011. We settled down. And now from 2016, you can see if we project it out till today, look at this, so interesting to me. That last column, all right, I'm showing you the last column is about today's price. It's about today's price. So what it's showing you is from 2016. Once we get to 2016, the growth, the adoption, the price of Bitcoin has settled into something that grows at about doubling every 12.7% increase in time. That's what it has shown. And really, if you study this last column here that I show on my website, I think it should put some light bulbs off for people about how it's actually growing. Because look at 2016. Understand what this column says. It says if the prior year-end trend line held, that means only measuring the data from 2016, that is from 2010 to 2016, what would the trend line project today? And the answer is 93,000. Well, what's the price today? It's 96,000. It's pretty darn close. It's pretty darn close. And it's the same for all these years. So that's what I mean when I go back to this chart and I say, isn't it interesting from 2016? We've just sort of, even though it's a little bit lumpy and it does, remember, this trend line updates every day. So every new piece of data I feed in, it will go up, down, up, down. But really from 2016, it's smooth. It's really interesting. So that's why, again, another reason why I wanted to show this sort of evolution of the trend line, if you will. That's what I'm trying to show here, to get both better multiples, historically more accurate multiples, and also just to show you how it's grown. So that is that. Alexander asks, is there any impact from the rest of the world on their financial irresponsibility? In some ways, yes, but like I said, it all flows into the adoption of Bitcoin. If you would compare, like I said, the world money supply doubles every 6 years. All right, that's a huge doubling. It's a much faster growth of doubling than Bitcoin. But you see that other than the booms every 4 years, Bitcoin does not pick that up as much. It's just it's just the nature of the system. It's the nature of adoption. And the fact that this R squared is so huge at 96%, it informs that this is just a trend that it seems that the system is going to continue on. It's a trend of adoption. And that's what I like to say more than it's a price trend. It's just a trend of adoption. So yes, it always matters that all these, we can measure 6 ways to Sunday, as I try to do, with a lot of these different charts, how fast the money supply grows, how fast other stuff grows. But Bitcoin has gone on to this trend, certainly evident from 2016. I posted about it first in 2018, although I was 3 months after Giovanni, the power law champion, I'll say. It's pretty amazing that Bitcoin has stuck to this trend. Okay, so that's that. I wanted to do now, I'm happy to answer more questions if you guys want to look at more charts, but I just wanted to, for this first live video, sort of tell you a little bit more about me and tell you why this is important. First of all, I don't plan on ever doing a newsletter. Newsletters were always sort of slightly scammy to me. I've learned a lot in newsletters, but I know that I'll never hold a deadline myself, so I'm not going to I'm not going to keep. I'm not going to do a newsletter. At least, no way in the foreseeable future for me. I'll try to just explain what I can see in the world as I can. All right, I'm not going to go through every point here, but basically history, economics, liberty, libertarian principles and stuff are important, arts and recreation as well. I'm over here in Eastern Europe. I'm a Latvian American. I live here now. And, so the history of this region is important to me. Obviously, NATO and the Cold War history is important to me. I forgot to do for this live stream. I was going to do a Venn diagram. of people that like Bitcoin and people that support Ukraine, and show that Venn diagram. And I'm pretty sure that the the people that like Bitcoin are over here, and the people that support Ukraine is over here. And to me, there's a very small intersection in that Venn diagram, and I'm happy to say that I'm in it. Okay, so I know that I talk about Ukraine a lot on my podcast and in other areas, and a lot of people get sick of it because a lot of people in Bitcoin hate the government in every facet of their lives. But I do think that there's more to it, and I think the point is that's where I'm coming from, and I'll continue to talk about that. Some of the people here in this list, Thomas Mann, for example, is a great writer, German dissident, traveled all over the world to avoid the Nazis, and he gave speeches against the Nazis from America. He's a great example of this. There's other free market economists, some that the hardcore or brutal libertarians like the Austrians, which I consider myself a fan of Austrians if you're talking about Ludwig von Mises. There's a lot of people that are just weirdly pro Putin, or at least not anti-Putin, which is very strange because he's a total dictator that murders everybody. And that's what's happening in Ukraine. So again, freeing Ukraine is very different than invading Russia. No one is talking about that as far as I'm concerned. Freeing Ukraine, kicking an invader out of Ukraine is very different than invading Russia. So that's just important to me. It's part of my history. I wanted to sort of say that because I might have not said it so clearly before, but if you want to know why I think that way, I'll continue to talk about that, is I have Eastern European roots, and we need strong partners, strong allies. Let's do some quick examples here. I like this one. This is Lord Palmerston, not his actual name. I forget the actual name even. That's his sort of Lord title, British Prime Minister in the 19th century. We have no eternal allies. We have no perpetual enemies. Our interests are eternal and perpetual, and those interests it is our duty to follow. So people have rewarded this quote. It's there are no allies, there are no friends, there are no enemies, there are only interests. I think that's probably true. But then we have John Kennedy here in his inaugural address. He said, "To those old allies whose cultural and spiritual origins we share, we pledge the loyalty of faithful friends. United, there is little we cannot do. In a host of cooperative ventures, divided, there is little we can do, for we dare not meet a powerful challenge at odds and split asunder." All right, so I'm gonna talk about military history as well, expenditures. I've put up some videos on that last year. If you're interested in that, again, it's all part of the package, at least for my life and things that I'm interested in, what I'm going to talk about. So there's our website. If you want to donate on any point here at the bottom of the page, you see my BTC Pay server. I'm happy for any value contributions. You click that link. Oh, shoot. I don't even have, sorry, this is my live stream problem. My live stream issue here. I need to do a picture-in-picture. It's coming. It's coming. Sorry. It's coming. I don't even think I had the screen up, did I, when I was talking the whole time? Sorry. Here it is. Live stream. This was important to me. No newsletter. I'm not going to go through it again. European history, Cold War history is interesting. There's a lot of free market economists that went through this. Ludwig von Mises is number one. Notice I don't have Murray Rothbard on here. He's, in my opinion, a flag bearer for the more brutal libertarians that has not shown very solid even history, and I'm happy to send links. about the evolution of Eastern European countries. Milton Friedman, a lot of people hate him, but I think actually he's done more for liberty than any economists ever. So he's a very good person to read. And other things. But anyway, this is the slide I wanted to show here before. I think I was not showing it because I don't know how to live stream yet. I read you these quotes. Here's my website. If you want to donate some Bitcoin, always appreciate it. Just click the BTC Pay link at the bottom. It will take you to this page. You can donate to my BTC Pay server any amount you want or not. I really appreciate it. Like I said, I'm not going to do newsletters. I don't want to promise something that I can't deliver, and I don't know. Personally, I'm not interested. I'm just gonna draw what I think is interesting when it comes to charts, and then if we're gonna talk about liberty and the pursuit of happiness and standing up to dictators, I really like some of the quotes that I'm seeing here in the chat. Thank you, guys. So, yeah, that's all I really had for this stream. I don't know if there's any other questions coming. I'm happy to answer. I can also show you, other charts. Actually, I see one about the monetary base. It's here. I guess I answered that question. It's 5.6 trillion. G. I think that's your username, G or G. 5.6 trillion. And the growth of it, just if you want to look at, this is the same thing. As far as a multiple, it grows like this since 1969. So 5.6 trillion represents 88.8 times more than it was in 1960, if you want to do the quick math there. So this is actually literally how the monetary base looks since 1960. So, that is it, guys. I don't see any too many more chats. Thank you, Stuart. Thank you, RT Bit and GOMS. I really appreciate your guys' views, and I think it's really nice to see. It's really nice to see. And I'm going to be here trying to support Ukraine, as I know you guys are as well. So I guess that is it for today. I'll end this stream a little over an hour. Thank you for watching. And like I said, I'm not sure if I'm going to do this every Friday. I think Friday is a good day. I'll try to do it on Fridays, but maybe even more than that. This is more fun, actually, to interact with people here on YouTube. So thank you guys for watching this. I really appreciate it. As I sign off, because I'm such a slow streamer, I'm going to put back my face. I'm gonna need the picture-in-picture on the next stream. Baby steps here. But thank you for watching. I really appreciate it. And until next time, see you guys.